Chukwudi, what exactly is your work? 2 years, you have sold phone, you have sold car, you have sold shoes, and now you are selling furniture. What exactly is your work? Now, are you like Chukwudi, that you have been selling different kind of things? I understand. I'm sure it's because you are trying to make ends meet. Country hard. That is one of the reasons why in the next 100 days, I'm going to be showing you a better way of doing this thing. How you can find purpose, how you can stay and focus on a business and build it and become a huge name. I'm going to be teaching you how to build a successful business. And even if you decide that you want to go online and you want to diversify, I'm going to be showing you exactly how to do it. And also I'm going to be fixing that mindset of yours that has been taking you pure. Join me on this 100-day journey. It's absolutely free. Titled Mind and Money. I am going to be teaching you skills that will help you transform not just your mind but also your pocket. Click on the link below to get registered. See you there. You know say too much garri dey cause alcohol. And you know say this your garri wey you dey take na because of Satan. Now let me show you how you can increase your income. Let me show you ways like stop drinking garri every single day. There are other types of food. There's rice, there's beans, there's chicken, there's so many other things. But you cannot afford those things if you rely on only one source of income, which is your salary. In the next 100 days, I'm going to be sharing with you how you can make money both from cryptocurrency, Forex, and from owning a business. And that is not just all. I'll be adding a bonus on teaching you life skills, how to get out of depression, how to handle breakup, and how to live a best life. If you are interested in turning finance around, click on the link below. Join me on this transformative journey. It is absolutely free. Stop drinking garri every time. Because I said it's free doesn't mean that the link is going to remain open forever. Get on board. I'll see you then.
All right. Good evening, ladies and gentlemen. Good evening, good evening, good evening. All right. Welcome to yet another edition of the Mind and Money series, right? Welcome to another edition of the Mind and Money series. Okay, so I want to believe you are ready for what we have today, right? Today we are going to be looking at the Forex Diaries. Forex Diary. And what we are going to be, topic we are going to be looking at today is why do I keep making the same trading mistakes? Why do I keep making the same trading mistakes? Right? A lot of people have learned how to trade. They know how to trade. They understand the tools of trading. They understand all the charts. They understand the candlestick. They understand the chart patterns. They start trading. They make good money. You understand? They start trading and they are doing well trading. Then all of a sudden, they lose their money. They come back again, they rinse and repeat. They start trading again, and the next thing, they lose again. The question now is, why do I keep making the same mistake? So today we are going to be looking at that mistake. What are those mistakes that you make? Why do you keep making them? And how can you improve? Right? What are the mistakes? Why do you keep making them? And how can you improve from repeating those mistakes? Okay, so without wasting much of your time, or like Oyibo will say, without further ado, let us do. All right, so what are the major mistakes that a lot of traders make? Right, we have talked about 5 mistakes traders. One of that we had a guest speaker, Mr. Kenneth Felix Izuna, that spoke about it. Right, so we are going to be looking at some common mistakes that we make. And the essence of looking at these mistakes is to, because these are the mistakes we make. We'll look at these mistakes, we'll look at what causes these mistakes, and we'll look at how we can improve from having these mistakes or from making these mistakes regularly, right? All right, so what are the major mistakes we make? Number 1, emotional trading. Emotional trading. These are major mistakes, major errors that a lot of traders make. Emotional trading. Now, emotional trading is when you are trading based on your emotions. You're acting on impulse. You're acting based on fear. You're acting based on greed or excitement. You're trading based on impulse, fear, greed, or excitement. That means your decisions are driven solely by your emotional reaction to what is going on in the market. This is a major problem. And this is one of the reasons I advise people, when you need money so badly, don't enter the market, because there's a high tendency that you're going to lose it. There's a very high tendency that money, you are going to lose it. Emotional trading. Number two, over trading. Over trading. That means you are trading, you are opening excessive number of trades within a short time. You're opening plenty trades within a short time. And one of the major reasons is as a result of impatience. You're not patient enough to wait for market to meet all your entry criteria. Whatever activities it is that you have said that, okay, when I see these things, I'm going to take a trade. You are not patient enough. So you just keep opening trades. Right? And this can be very, 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 very bad. Why? Because apart from the fact that it could lead to potential loss, it will increase your transaction cost. Because imagine you open 5, 6, 7, 8, 10 trades. How many spreads, all the spreads that you have lost in that 10 trades already is you losing money through transaction cost. Right? And apart from that, the stress level is heightened. You cannot sleep if you have that number of trades open. So these are major problems. Number three, revenge trading. Revenge trading is the same thing as chasing losses. You take a trade, you made loss. Instead of you to just lick your wounds and come back the next day, you say, lie. We've made these mistakes, right? We've all made these mistakes. Revenge trading. You are trying to recoup your loss by increasing your lot size. You are opening bigger positions, bigger trading positions. You are engaging in riskier trades just because you are trying to recoup your loss. Now, let me just play a simple scenario for you. So you come with $100 and you have a target of making $20 that day, just for instance. And on your first trade, before you know, you've lost $80. And rationally, you should either stop trading or pause trading, either for that day or for that week. But you say, no, lie, I die here. So you say, okay, you open another trade. Because already you are not, and the second trade you are opening, you are not opening it because the market is favorable. You are opening that trade because you have seen that this $20 that this market take, instead of it to give me $20, it has taken my $20. So you are angry, and what you want to do is, at least let me get back my $20. So you revenge trade, you chase your loss. And what's going to happen? The market will notice it. Because you are now going to leave rational thinking to emotional reaction. And that is going to cut your losses deeper. It will exacerbate your loss. Right? Number 4, ignoring risk management. Ignoring risk management. Now, when you don't employ proper risk techniques, proper risk management techniques, such as stop loss, or you don't adhere to the right lot size, you could lose your money. And it's not that you could lose your money, you will lose your money. And these are mistakes people make. Every single time you open a trade and you ignore stop loss. You open a trade and for some reason you decide, I'm gonna make I just increase the lot size. No, this trade look like it will make sense. Let me increase the lot size. This trade looks like it will make sense. This trade look like it's going well. Let me increase the lot size. So you ignore every risk management that you know. That's one of the problems. Number 5, trading without discipline. Trading without discipline is that you are deviating from your trading plan. You are deviating. So you have a trading plan and you cannot stick to it. That is trading without discipline. Stick to your trade plan. Because if you are not disciplined, it will lead to inconsistent trading results. Then you will not be able to tell how effective your trading strategy is. And one of the things you want to do is to make sure you have a consistently winning strategy. Even if it's giving you 60, 70% wins, fine. So you want to make sure you have a what? Consistently winning strategy. Very, very important. Right? You want to ensure you have what? A consistently winning strategy. Number 6, confirmation bias. Now, what is confirmation bias? Confirmation bias simply means you enter it, you open the chart, and instead of reading what the market is saying, your mind is telling you the market will go up. That's your mind. That's not what the chart is saying. Or you want the market to go up. So what you are looking for anything that looks like an idea to confirm what you are thinking in your mind, disregarding any other contradictory evidence. So as long as your mind is telling you, this market will go up, you know that feeling when you are saying, it will go up, it will go up. I know, I feel like say this market will go up. That feeling. So when you open the chart, you are not looking for your trade pattern. You are not looking for your trade strategy. You are not looking for any of this. What you are looking for is anything, any information that will confirm your pre-existing belief. So most times you find out that you start looking, you go online and you start looking at other traders. What are they saying? What are other traders saying? Hey, this person say it will go up. Now, hey, that means it will go up. And confirmation bias can lead traders to overlook warning signs. It can cause you overlook warning signs. It can make you misinterpret market signal. And it will affect your decision making. Right? Number 7, overconfidence. I'm a pro. I've been trading for 15 years. I've been trading for 100 years. So your morale, you have shoulder pad inside all your shirt. This is how you used to work out because you do $1,000 last week. Overconfidence. You are overestimating your ability and what you know about the market. What is going to cause that? What is that going to result to? Excessive risk taking. You'll be taking risk as if, you are JP Morgan. You'll be taking risk as if, I can't go wrong. Last year, we made over $10,000. We made. Baba, calm down. Reduce your shoulder pride. Cool it down, right? Overconfidence can cause you to take risks that are very unnecessary. It will cause you to avoid potential pitfalls. It can also result in what? Unwarranted ginger, unwarranted positive thinking. It will cause you not to make thorough analysis because you just feel a Sabian. Number 8, trading without a plan. Trading without a plan. Major mistake. And you know what? A lot of people make this mistake, You're trading without a plan. You got no plan. You're going to lose, man. When you trade without plan, there is no clear, well-defined trading plan or strategy. My brother, you're going to lose. You're going to blow that money. You're going to dash it to the markets. When you go and trade without a plan, it's going to increase the likelihood of making losses. Right? It increases the likelihood of making losses. Why? Because you are going to be reacting to short-term fluctuation. Okay, you have analyzed the market and you see, okay, this market is bullish. But if the market starts doing as if it's coming down, guess what? You will sell. And immediately you sell, what will happen? Market will go back up. Then you now think it's your village people. You see? But it's not your village people. It's because you have decided to trade without plan. Right? Number 9. Not being adaptable. Not being adaptable. That means you are failing to adjust your trading strategies. I mean, this is the method that I learned with in 1991. So you don't want to change. This method has given me $1 million before. And now you see that the last 10, 20 times you used it, you are blowing account. But you say, lie, ancient of days. You decide not to change. Not being adaptable. Learn some new trading skills. Learn some new trading styles. Very important. You must be able to respond to changing market conditions. You had bullish bias on GBP USD, but there is a news that is telling you that GBP is going to lose value. But you say, a lie. Nothing happen. It will still go up. Have you heard that statement before? It will go up. I've had traders say it too. It will go up. No worry, it will still go up. One funny story. I had one of my boys. Yeah, we were discussing about Forex, and he was telling me how there was a particular day he was trading and he was bullish, but the market was bearish. And the sad part is that he was trading fundamentals. That means he was trading news. The news is against the pair he was bullish on, meaning that pair is supposed to fall. But because he has opened a trade, he somehow wanted that the trade understand that it's him, not me. So he can't go against me. Then guess what? When the trade started going against him, he was seeing that his money was dropping. Then him and the friend that contributed the $200, that be $150 to trade, they now held hands and started praying in tongues. Reke, kete, kete, market is dropping. They are saying kete. You know what? They blew the account that day. Kete, kete, kete. Don't close the trade. You must be able to adjust to the changing market condition. You were bullish on this pair. The news came, it did not favor the pair. Get out of the trade. It's a simple something now. Okay, no, now that you're praying, do you know whether it's one bishop somewhere that invested and said that the market will come down? So you are praying that the market will go up. The bishop is there praying the market will come down. So everybody praying. My brother, God is not in that forex market. It's not there. It's not like this election something now that we are shouting. Election. This Tinubu regime will favor me and my family. This new regime will favor you and your family. Well done, eh? So you and your family are buying Indomie separate. Or you and your family are buying spaghetti separate. All of us will be inside. It will not favor anybody and the family. If you know how to make money, you make more money. It's not a prayer. Somebody was asking that this one things are hard. Is it because I did not forward that message to 7 people? It's not why, yo. It's not why, my brother. It's Sakpa that is doing you. Sakpa. You understand? Sakpa. Right? So number 10, failing to learn from mistakes is one of the reasons why you are losing consistently. But you keep repeating the same trading errors without reflecting on your past. I've been guilty of these things. So this thing I'm telling you, I'm not telling you I'm chairman. These things I'm telling you, I've been guilty of almost all of them. Right? You need to be able to analyze on why you've lost in time past and learn from those mistakes. You need to go and watch the video that we did when we say it's okay to fail. You really need to watch it. It will help you on this particular point. Right? So you need to learn from your mistakes. Okay, so these are some of the major mistakes that we go through, Now let's look at what are the things that trigger these mistakes, or that leads to impulsive trading, or that causes irrational thinking when you are trading, irrational behaviors when you're trading. Because your psychology or your psyche is stimulated by your emotions, right? And this will cause you to make irrational decisions. And these decisions can trigger and influence greatly your decision-making process and contribute to the outcome of your trades. Number one. You see the number one? Number one is fear. Fear. Very powerful emotion. Very powerful. Either it's coming from uncertainty in the market, or the fact that you could make losses, or it could be fear of loss or fear of missing out. These two. You enter the market, you see that market is already pumping. So, boy, for say I enter this market from here now, from here to here now, 80 pips. I don't make, but see this big candle, you see huge candle, and you forget to draw any of your lines, you forget to draw your support, your resistance, to do anything, you just FOMO. Fear of missing out. Only for you to enter, it just one spike, it just come back down. Because you did not even know why that market was pumping in the first place. FOMO. It can lead to impulsive trading decisions. So you rush to enter. That's what FOMO does. Then fear of loss. It can cause you to either avoid entering the trade, or you cut your losses late. Right? And it can lead to increasing, in fact, cutting your losses early safe. So you enter a trade and you set your stop loss. Market is approaching your stop loss. For some reason, you are afraid of losing money. You set your stop loss at maybe 20 pips. Then market is at 17 pips. Fear of losing now causes you to close that trade manually. Then after closing that trade manually, boom, market reverses. Closing your trades, you are closing your losing trades early. Not even allowing it get to stop loss. You are not giving any. It can be very, very dangerous. It can be dangerous. You get it? Number two, greed. Long throat. You want to use $5 to make $10K. You say, no, I've seen it. I mean, I saw a video on YouTube. Yeah, I used $100 and he made $200,000 on one single day. Man, it's possible, Then you are motivated, you are gingered. You enter the trade and you are forgetting that $10 now is 17 or 18K. Then long throats will not allow you to take your $10 profit. You say, no, it will go up. Intense desire for excessive profit is greed, long throat. And what we did do, it can cause you to take excessive risk. It can cause you to deviate from your trading plan. Why? You are pursuing high returns. Do you know that you can consistently make $5 to $10 every day trading Forex with $100 account? Consistently, comfortably, with minimal risk. But you know what you're looking for? You're looking for $100 to make $1,000. Forgetting that if you're making $5 every day, it's about 8K per day. 8K per day is 160,000 in a month. Trading on work days only, that they are not trading weekend, is 160K. $5 a day. But you know what your problem now is? Greed, long throat. You are too optimistic. You are overly optimistic. You have seen your $10. Okay, this trade you targeted $10. $10 has come. You are seeing the $10 in floating profit, but you say no. See space. It will go up. Then your $10 start dropping. It's not $8. I say it will still go up. It's not $7. It will still go up. It's not $5. It will still go up. It's not. You now reach what break even. Say it will still go up. It's now -1. Say make it just go up, even if not break even, mark closer. It's now -2. You say, oh no, God. You now call your neighbor, call your children, call your family member, reke, kete. You will lose the money. You will blow the account. Exactly? You will blow the account. Number 3, anxiety. Anxiety. You want to take a trade. You know there is news coming. You don't know the direction the news will go to. Then you enter a trade and you are anxious because of market fluctuation, because of unpredictable events. Do you know what anxiety will cause? It will cause you not to make decisions. You will be hesitant when making decisions. You will second guess your trading decision. It will also cause you, it will stop you from taking action. So you will miss a lot of opportunities simply because you are anxious. Simply because you are anxious. Number 4, impatience. Impatience. You enter trades, you just see market. This market will go up, you buy. You did not wait for all your entry criteria to come. There is a desire for immediate gain. This is one of the reasons why if you need money, you should not enter market. As you know, as you need money now, landlord came to your house and knock and say, young man, by next week, if you not bring my money, I'll pursue you. I'll bring your load outside. Then somebody now borrow you 50K and your house rent is 100K. Let's assume you are living inside Karo village. Then you now use this 50K instead of to give landlord as advance. Your mind is telling you, you can make it. Then you now decide to now play with your house rent. You now use it to trade. Then you know what? You will now lose it. You will now blow your house rent. I hope you know one guy committed suicide. He used somebody money to go and play Naira bet. Impatience. You are looking for immediate results. There was one period there. I know I suffer. But it wasn't trading, because I know that if I enter trading with impatience, I'm gonna lose my money. So I decided that I was gonna try Naira bet. My God, Bayern Munich show me shaggy. Impatience. Impatience will turn you from an investor to a gambler. You will be using Forex to do one quarter. There's one guy they used to call one quarter. You know what one quarter means? You will see him every time we hold long paper like tissue paper. You want to use 100 Naira to win 100 million. Then you see him the next morning very sad. Say, what happened? Oh boy, that game, everything enter. Now one quarter. One quarter. That's what impatience will turn you to in trading. You will start making impulsive decisions. You'll be entering and exiting trading prematurely. You're not waiting for confirmation, nothing, no criteria. You just open market, you see green candle, buy. You see red candle, sell. It's going against you, sell it. Impatience. It will undermine your trade practices. Right? So very important. The next is excitement. Intense excitement. You see, when trading, if you make consistent profits, that means first trade, enter, second trade, enter, third trade, enter. So you're on a winning streak, like 10 trades don't enter straight. There will be what we call euphoria. Intense excitement. You go to motivate, like anything I touch turns to gold, man. You know, so any pair I buy, we go up. Any pair I sell, we come down. So you are feeling like the hand of Midas. It will cloud your judgment. It will lead to overconfidence. You will take risks that when you're analyzing the trade, you say, now maybe this. You will become complacent. You will not follow warning signs. The same way losing streak causes you to revenge trade. Winning streaks causes you to be overconfident, and it will cause you to lose money. Now, you understand? You get it? All right. Number next, regrets. Regrets. You are feeling bad. Hey, this thing, I see this GBP USD. I saw it. I know he hit the line. He touched as he crossed. Immediately, he just crossed that line. I know that it was going to go up. I for enter this trade now, for turn this $100 to $2,000. Regret. That feeling that is coming from disappointment, that you either made a loss or you missed an opportunity to make massive profits. So you will dwell on past mistakes. And it can cause you to miss new opportunities. It can cause you to have indecision in trading. It can cause you to be hesitant. It can cause you to avoid similar opportunities in the future if those opportunities resulted in a loss. Regret can hinder your ability to move forward and make objective decisions, trade objectively. Why? Because you are avoiding repeating the same mistake. Number next, envy. Envy. You know what envy is? You are checking other people's results and you are feeling discontented about it. You are feeling resentful about it. So you are thinking, this guy, waiting in no self. Waiting in no one, no. This guy started trading 2020 in this market till 2001. What does he know? So you will start comparing your performance with their own. And it will cause you to start a very unhealthy competition. Or it will increase your self-doubt. This guy just started trading. I've been trading since. You are forgetting that you made profits. You are forgetting that there were times when you were having wins back to back to back. Every trader will have losing streaks. You need to understand that. Every trader will have losing streaks. If you are envious of another trader, it will cause self-doubt. Or it will cause you to abandon your trading strategy. And without testing their own strategy, you jump into it. Envy. Very, very bad. Very bad. Number 8. Hope. Hope. You see hope, eh? Hope is the oga kwata of them, or oga kwata. That belief that the outcome will be positive. Even though you are seeing that market is changing, market condition is changing, you are seeing that the charts have broken market structure, but you are hopeful. You are hopeful. The market structure has been broken. You are seeing that it has broken trend line. Market is looking like it wants to come back down, but you say no, it will go up. So traders will cling to hope even in the face of mounting losses or even adverse market trend. You are reluctant to accept the reality that market have changed. An excessive hope can cloud your judgment. It will delay your decision making because it will cause you to hold on to a losing position for too long with the hope that the market will change in your favor. Number 9, panic. A sudden fear don't enter you. Oh boy, this market figure like, kai. One more, this is my $100. So this is my $100. So hey, God, oh God of Forex, remember me. Remember my brother, your money will go like that. You are panicking. And it will cause you to become impulsive. This market don't go down. Don't go down. Say. Immediately you say, boom, market start going back up. Hey, I talk up. Oh yeah, buy. You buy. As you buy, you start coming back down. And before you know it, we just whipsaw you. A market that is going sideways have cleared you because you are panicking. Right? Then complacency, number 10. Complacency. That feeling of, self-contentment because of how well they have been acting before to make you vulnerable. Let me explain what complacency means. Your football team is playing match, and all of a sudden they win. They are scoring 2-0. You see Nigeria and South Africa? Exactly. We score 1-0 and we started strolling on the field, we in our mind we have carried the cup. Before you know it was 1-1. Then we are still strolling. Our keeper good, we go penalty. Before you know it was 2-1. 89 minutes. That's when our players now woke up to start playing the ball. That's complacency. Overconfidence. You are just too calm, say nothing will happen. I know how these things will work. Eventually, this trade will go my way. So don't just worry. Whatever is happening in the market. We've been doing this thing for too long. We have seen results. We've made so much money from this. So Chale, just relax. They play. Just they play. Okay, so how can you break out of this cycle of repeating mistakes? Okay, so I'm going to use the next 2 minutes and rush this thing. 1, keep a trading journal. Keep a record of every trade. Your entry, your exits, the reason you entered the trade, the emotions you felt, and the outcome. What did I say? Your entry, your exit, reason you entered the trade, the emotions you felt, and your outcome. Then regularly review your past posts, your past trades. What are the patterns? What are the recurring mistakes? What are the areas you need to improve on? Right? At the end of this, in the course of these 100 days, I'm going to introduce you to a trading journal. Very powerful. Number 2, identify common mistakes. See here, a problem you cannot identify, you cannot solve. That's why when you go to hospital, they will first say, go and do tests. You see, but because you're an average Nigerian, once you feel headache, you go and buy Amatem. Everything for you is what? Mania. Identify common mistakes and patterns that have led to these losses. That's one way. If you want to do it, keep a journal. 1, identify the mistakes. Whether it's impulsive trade, whether it's over trading, whether you are revenge trading, whether you are ignoring your risk, whether you are neglecting your trade plan, whatever it is, identify it. Number 3, now develop a trading plan. What are the clear criteria, your entry and your exit criteria, your risk management rule, and your trade strategy? It should be there, and stick to it. Stick to it. Number 4, set realistic goals. Don't use $10 to pursue $1,000. You are not a thief. Set realistic goals. Right? And the goals should be based on your risk tolerance, your capital, very important, and your trade experience. Avoid setting ambitious goals. I just gave you a very simple one. With $100, you can be making $5 on every average day, or even $10. Averagely, it's not a joke. And you know that $10 is 18K. Imagine you're making 18K daily. In 10 days, it's 180K. In 20 days, it's 360K. How much is your house rent? But long truth will not give you. Set realistic goals. Number 5, practice patience and discipline. Patience and discipline. Patience and discipline. Avoid the urge to act impulsively. Anytime your village people start calling you, buy, my son, buy. Avoid it. Wait for high probability trade setups based on your trade plan. Number next, implement risk management. See, the most important thing to do in trading is capital preservation. Preserving your capital. Very, very, very important. It's very important. Capital preservation. Number next. What number is this one now? Number 8. Learn from your mistake. I've talked about it before. Learn from your mistake. Embrace the mistake with your full chest and learn from it. Don't look at it as failure. Don't look at it as a setback. Embrace it with your full chest. Then learn from it. Number next. Seek mentorship. Remember I told you that when I started trading, my mentor too was learning. I was learning with that mentor too. So you can imagine. But at least I had mentor. It's him I was pitying because him that was losing way. But eventually we got a hand of it. You see, I'm telling you, how many years ago? It's over 15 or 16 years ago. So seek education and mentorship. Till today, I still watch Forex trading videos till today. I'm still online thinking, okay, is there a better way of getting these things done? Every single day. When I started trading then was about how many indicators you can use. I mean, there was this flex when you open your chart, it's looking all complex, and it's only you that understand the shit you are looking at. And and as you are looking at it, your mind is telling you, man, I'm a trader, but your account is telling you, my brother, they play. Seek education. Right? Read books. Listen to other people, experienced traders. Listen to other profitable traders. Number next, practice self-control. and learn to regulate your emotions. Number 10, stay adaptive and very flexible. Be flexible. If you see that your results, you are not getting as much result as you should get, the market is dynamic. So there's every tendency that your trading plan may stop giving you maximum returns. So you should be flexible enough to try out a new trading plan. Of course, on a demo account. And once you see that it's printing you some good results, why not? You can now apply it on your live trade. Right? So you have to be flexible and adaptive. Be open to experimenting new ideas, experimenting new techniques, new tools, right, to enhance your trading performance. I want to believe you have gotten value. In the words of one of my mentors, have you been blessed? Right, so I believe you've gotten so much value. This is where we're gonna draw what? We're gonna draw the curtain. We're gonna draw the curtain today. So tomorrow, hopefully, our guest from the UK is gonna be joining us, and we're gonna be talking about how to make insane profits. All right, like I said, hopefully, I hope he doesn't postpone us this time again. But I'm very sure that God will help us to have him. Okay, so thank you very much. This is day 25. And I mean, it's been awesome. A quarter of the 100 days gone. 75 days more. Thank you very much. I'll see you tomorrow. Thank you for your time. Thank you for trusting us. Thank you for spending your data watching this. And I believe you gained value. And if you did, you know the drill. Share the video, send it to your friends, send it to your loved ones. If you know anybody interested in trading, please tell the person to watch these videos. And like I said, if you want to gain maximum value of the 100 days, it's only wise that you start watching from day one. Thank you very much. Till 7 p.m. tomorrow. God bless you.